Anthony, just explain, is there, I mean, Anna was pointing out there's a number of different catalysts. Is there one that's really driving the sell-off today? Is it a combination of them? How concerned should we be? Is this a reminder of the leverage story? Is it a reminder of the concentration risks in Korea? What stands out to you in terms of the sell-off today in Korea?
Yeah, pardon the expression, right? There's a bit of soul-searching out in Korea. It is the trifecta of things that you mentioned, to be honest. We started the day with the Apple concern, which probably would have kept markets down to 1 or 2%. Then we had OpenAI kind of looking to shelve its IPO plans until much later. That contributed to a down 5 to 6%. And then we had Samsung and Hynix announce that they would be doing some huge capital spending alongside the Republic of Korea, like official government, on Monday. So that was why when we saw the lows of the market down 8 to 9%. Now, that plan to increase capital spending is, the great leap forward for Korea, which is kind of a misnomer. They should not have gone with that, probably. And that has kind of given people some concern that this is a public spending spree along the lines of the common prosperity push in China. So, there are some long memories in Asia of that kind of spending, and it'll be incumbent on the Korean chipmakers to kind of clarify what that spending will be for. But for the moment, you do see the AI trade getting challenged on the cost side by the memory squeeze and on the revenue side by OpenAI's concerns. So, you have a two-edged sword here into the flow factor that you mentioned, that retail in Korea and in Asia more broadly is extremely long and volatility is extremely elevated. Here's a crazy stat. The market was down as much as 9% in Korea, but still implied volatility actually fell into the weekend because people used the opportunity to reduce some volatility instead of paying theta over this weekend.
Right, yes, that's just another indicator of the incredible moves that we're seeing in the Korean market. So we're trying to get our head around just what kind of profits these memory companies can make, and some of the volatility is part of that, I suppose. But we do know that some companies are already then, Anthony, being squeezed by the other side of that trade, that is having to pay up for memory. And that takes us to Apple. What stood out to you in the Apple announcements about the scale of the price rises on some of their products?
Well, Apple's put off this decision for quite some time, right? You've seen their competitors rush ahead of that. Xbox has increased prices a couple of times, Nintendo, Sony as well. So, Apple's held out for a long time because of its dominant market position and their upgrade cycle. But now they just can't seem to find any new chips. And it's the supply shortage that has kind of pushed them into this position. Now, Apple is not really going to suffer as much as some of the others, according to analysts. But a 5% move in Apple injects volatility into a part of the tech sector that it hasn't seen, and we're seeing that in a really big way flow down to Taiwan. TSMC is Apple's biggest supplier. TSMC is a giant in its own right, and is only down around 2%. But the TSMC smaller players who feed into TSMC and into Apple are locked at limit down today, down around 10% in Taiwan, which is why Taiwan has not had any chance to rally. It's been going down all day and has closed absolutely on the lows as you guys come in.